The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 21st terrific Thursday edition of Hour 2 of the Trader's Edge. I'm host Steve Rhodes, and I hope that you're off to a great start of your day. Well, if not, let's change that right now, because there's no reason not to have an extraordinary day, and let's make sure that you and I get everything we can out of it. Of course, let's always remember what's talked about is a dream. What's envisioned, well, it's exciting. What is planned becomes possible. What's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm honored by your presence. I'm here to serve you, so feel free to pick up that phone, dial on an 877-927-6648 if you'd like, or internationally, 727-445-1044. Remember, if you've got a question, thousands and millions and billions of others actually really do have that same question. So you're not calling in for yourself. You're calling in for someone else. That is called a random act of kindness. And that's the way to kickstart any day, especially this day on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 9 points, trading at 18,294. S&P is up 3 at 2129. The NASDAQ Composite up 7.5 at 5,079. Russell 2000 is flat. The DAX is flat. The FTSE is flat. Gold is flat. Silver is flat. Light sweet crude is not flat. Light sweet crude is up $1.37. Leading the charge, the upside, we got Bluebird, Bio, Amazon.com, Shake Shack, Salesforce, Yoku, Tudo, NetEase, Baidu, Valiant Pharmaceuticals, Advance Auto Parts. I think Advance Auto Parts was to the downside earlier, was it not? Now to the upside. Intercept Pharmaceuticals, Kirkland, CBSL, and Woodward, all to the upside. This morning to the downside, we got Open Text Corp, Velocity shares for the oil ETF, I believe. We've got Monroe Muffler, Lumber Liquidators, NetApp, Shopify. You've got the Bruker, McKesson, Equinix, Booz Allen Natural Health Trends, not so natural this morning, off 6%. And Buckle is buckling down off about 5%. Again, our call number 877-927-6648. Let's go take a look at what's going on inside of the QQQ series ETF. Right now, the Qs are trading at 110.19. 110.02 is really the line of demarcation. You may say, demark what? The line of demarcation being the swing point from April 27th. That low out there is 110.02. And if you close above 110.02 today, it says if you haven't already, it might want to go test the 111.16. It might want to go test the top of that swing point. Maybe close above it with more than 31 million shares. That sets up an A to B equals CD to the upside. That yellow diagonal line going across the top of my screen happens to be the top of the rising price channel. That would take you back to the 2009 time frame out there. Volume here. Yesterday we saw a nice little doji style candle that had 21 million shares. So you were pushing into the swing point with light volume. Nonetheless, we may have that same light volume today. And then if you close inside 110.02, says you can go test the highs of that level. Let's go to Victor in New Jersey. Victor, thanks for calling. Thanks for holding. How you doing this morning?
Good, good. I was looking at that BTU.
BTU, okay. Peabody Energy.
And I'm looking for FCX after that and Vail.
Okay. So in the case of BPU, we start with Peabody Energy first. Tell me what you're thinking of doing here. What is it that you'd like to do?
I'm just watching. I'm telling you, are they going bankrupt or no?
Now that I don't know. I'd have to really go take a look at their financial statements and see what it looks like. So that I can't comment on with regard to the price. Certainly the price has fallen off of planet Earth here. It was up at the $20 area or so back here a year ago. So you've gone from 20 down to about $4. So that's quite a haircut. Are you thinking at all of getting into this equity, or so when you say you're watching it?
Possibly, because they're into coal, so I don't know.
Yeah. Okay. Let's put this on a weekly chart, just see if we can get any kind of feel for an area of support for you inside this equity. And the answer is I can't. But you'd have to go back so far that it's not really worth going back there because that takes us into like the 2003 time frame.
Maybe another Enron, right? You think we got an Enron on hand?
You know, I don't know enough about Peabody Energy to be able to answer that question out here. What I do know is that you'd be bottom fishing for sure. And inside, if somehow you with an equity like this, if you thought that there was some kind of turnaround, they weren't going bankrupt, there was something that was going on there, probably worthwhile to look at some type of call option strategy, you know, way out in the distance here or something like that. But I can't tell you where Peabody Energy is headed to from. I can't find any real significant support out here for it.
FCX, what do you think that's doing?
Well, if it FCX Freeport McMoran.
Yeah, it went through the 50-day moving average and all that again.
Freeport McMoran, the interesting thing about this equity, let me see if I can do this. Give me a moment here. When you trade Freeport McMoran, what you're really doing, Victor, more so than trading the equity, is you're actually trading the Aussie dollar. I wanted to see if I can put that. Let me just see, and I'll show you a correlation between those two if you'd like. Give me a moment here. We're going to put the Aussie dollar up on my screen right now, and then we're going to go ahead and add to it Freeport McMoran. So take me just a moment to do this, and then we'll come back and just take a look at Freeport McMoran on its own. But when I show you this correlation here, I'm going to add the Freeport McMoran symbol. Now, I've just got a line chart out here, and the line chart is just going to show you the directional correlation that exists most of the time. Nothing's going to be out here all of the time, but it is worth noting. Now, the bottom portion of my chart, Victor, if you watch us on Tiger TV, that's Freeport McMoran. And the upper portion of my chart is the Aussie dollar versus the U.S. And you can just see the directional correlation here. So if you're going to trade Freeport McMoran, you're really trading the currency pair out here.
So, and give me another one. What about Vail? Because I heard Basil saying if it goes past 650, don't touch it.
Vail. Okay, so let's go take a look at Vail, V-A-L-E. Now, what? I know they're a mining equity, but I forget what's their core mine?
The ore. They're into ore. So
okay.
Like Cliffs Natural, CLF, do the same thing as Cliffs.
Okay. You know, in the case of this equity, it sure had a nice run, and it broke through a descending price channel back on April 22nd and 23rd. But it really ran into some significant resistance back here on at the January 22nd highs. This thing here, if we just take a look at natural retracements for you, Victor, from low to high, it's already made, it's below the 0.618 and says it probably moves back to 624. I would have to say if you're looking for an entry into this, you probably want to wait for it to get to 624 or lower. This thing really broke out at a price level here of 580 to 596. That would be the place that you would take a look at maybe putting a trade on, especially if it comes back with some light volume. And that's ticker symbol V-A-L-E. Again, you know, Freeport McMoran, there's nothing wrong with it, but most people don't realize or recognize that it really is like trading just simply the Aussie dollar out there. But in the case of Freeport McMoran, if this thing pulls back here to the April 15th low of 1903, that might be your buy point.
Okay, great. Thanks.
You betcha. That was Victor in New Jersey out there. Let's go back and take a look at the IWM. Let's go take a look at the ETF. So we took a look at the Qs. We know the line of demarcation there. The IWM, which rejected the lows first out here, that gave you the indication that the market would go ahead and bounce because it was unable to break out that March 10th swing point. Tried for three sessions with volume, couldn't do it, and then decided to finally give it up on the day of May 7th because it was a test with light volume. Now, price really just moving between its market profiles out here. That says 125.66 ought to be really good resistance, but no reason for it to not go test 125.92, the low of April the 15th out there. Any move above either of those two areas, and then price ought to move up to the 127.13 level. That's what's going on inside of the small caps, the IWM. If we take a look at the SPY out here, what is it doing? It just continued to, how about that? It also does that too, but it continues to hover above its hoverboard area, 212.24. And that's really your B point of an A to B equals CD to the upside. That level was actually taken out with volume because on the trading day of February 25th, you only had volume of 73 million shares. and that level was surpassed with 76 million on May 15th, 74 million on May 18th. So you're over the swing point with volume. It says at any point in time that the SPY could go ahead and make a move up to 218.50. The yellow line, the diagonal line on my screen out here that you're looking at, that is also its rising price channel from the 2009 timeframe. So it could easily find resistance there. Certainly that high on February 25th found resistance there. There's no reason to think that it won't find resistance if it continues to move higher today, tomorrow, Tuesday, whenever it decides to move higher. Until it gets below 212.24, I'd have to say now 211.11 out there. You don't have any other information other than it wants to move higher, and that's what the SPY is telling you. But of course, there's more for us to look at than just the Qs, the IWM, and the SPY, and even Lucy in the sky with diamonds. That is the DIA. Now, that is not the 182.68 level, which is the March 2nd swing point. That only had 3.2 million shares, and it was surpassed with volume. Back here on the trading day of May 19th, that had, no, it was not, 2.7 million. What the heck was I drinking there? The Kool-Aid. So it was not passed with volume. And then yesterday, you did have the volume. There you go. And the close yesterday was, so it wasn't Kool-Aid. It was 182.70 when it was lemonade out there. It actually closed above that 182.68 yesterday with volume. That says the setup could be a move up into the 188.04 level. It's possible. You did have a nice little key, not a key reversal. You had a bearish engulfing candle yesterday, but that was pretty easy to do because what are we looking at? Doji-style candle the day before. Nonetheless, the leaves are falling from the trees. The diamonds, in order to say that the breakout to the upside is false, need to get back below 182.68. It's traded 182.79. But guess what? There is trouble in River City, so we'll go take a look at that trouble when we get back from this breakout here. Stay with us, folks. The Dow's up 5, the S&P is up 3. Be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 3, S&P's up 3, Composite's up 10 points. Russell is flat out here. Now, we were taking a look at the ETF structures before we went to break. We last were looking at the Dow Diamonds. Now, in the case of the Dow Diamonds, let's take a look at that chart out here. We took a look at that. We noticed this yesterday. And we're looking for patterns that indicate that some type of top is likely to happen or not out here. In this case here, what we're looking for is typical topping patterns. We take a look at the price oscillator. That's the bottom portion of my screen. In fact, let me just do this out here. Let me see if I can do this. I know I can do just about anything. There we go. Okay, now we're really looking at the top portion of my screen and the bottom portion. Just kind of squished the summation index out there. And what you can see is that when the price oscillator is above zero, it tells you the buyers are the ones that are in control of the market. So, sometimes, it's just like a football game. Think of it as a football game, right? You've got 4 downs in football. In the case of the stock market, you got as many downs as you want as long as you're above the zero line out there. Prices can pull back, and, as long as price stays above it, you're still in possession of the ball. You dip below the zero line and it says, okay, somehow there was a turnover. You gave the ball to the sellers. What can they do with it? In one day they can fumble it out there. So you're just really paying attention to the football game of the stock market by utilizing this price oscillator. Now, when the price oscillator makes lower highs and price makes higher highs, such as we have right now, such as an example we had going back, I'm just going to take you back here to the February time frame, from February 12th up to the high that was put in here on March the 2nd. We had price moving higher. We had the price oscillator doing what? Moving lower. When price finally got below that zero line, things just really gave way. Now, gave way was just nothing more than a dead cat bounce, a 0.382 retracement. You never know how far these things are going to go, but in that case there, we can see that the price oscillator was doing what? It got down really into what's called an extreme oversold condition, so you knew that a bounce was imminent, but what it was really doing was it was moving lower with a rising price oscillator out there. What was that telling you? Hey, I want to go back and revisit the highs out here. Well, the same thing took place when we had a little bit of a short retracement. It was like a one-day retracement. Nonetheless, we had it. We did have that price oscillator making lower highs out here. This is back in the February time frame. So we've got the same pattern that is in play right now. Tom likes to use the word subtle. So it's very subtle out here. Now, you never know whether or not these are going to be one-hit wonders, one-day wonders, 2-day, 3-day, 4-day, or more, or is it something that is of more significance out here? Because it's a pattern that is typical of a market that is making some type of at least short-term top. I believe that's the case out here, but I don't know for certain. But what we do know is it is a pattern that's in play when we're up at these highs out here, and when and if the price also gets below zero, expect the floodgates to open. But here's the deal: floodgates to open to where? And right now, our best case scenario is just coming back in the 17,620 area. If it gets back below that, then we look back into about the 17,100-ish area. And anything below that, then you can start taking a look at a more meaningful correction inside of the market. So we do have something, and what is really, the Dow, which has been making higher highs for the most part, but it's doing it without all of its troops out here. And this is only 30 stocks that we're taking a look at. So it's really signaling to us that you've got a problem. Well, guess what? We got that same problem inside of the NASDAQ composite as we speak right now. It, too, has a declining tops price oscillator out there. And it's really done all of its work. It did all of its work by getting back into that swing point from the trading day of April 27th. It doesn't have to test the top of it. It can, most certainly, but doesn't have to test the top of it. But nonetheless, we've got a pattern out here that's it is a absolute caution sign inside of the marketplace. If we take a look at the VIX index, that's trading at 1265. It's really not so much a huge caution sign out here, but it hasn't been able to make lower lows. If it does get below $12.12, this says that price is ready to rock and roll to the to the upside out here. But we'll take things one moment at a time. Now, 2015 has been an unusual year out there. What does Stevie mean by that? If we take a look, I'm going to stick with the Dow. I'm going to go back to the Dow. In fact, I'm going to go back to the Dow. Let me do this first, because we've had some folks that have written in, and so let me go to their stuff first, and then I'll pull up my stuff for us to ponder and take a look at. And one of the questions earlier this morning was the Dow transports, and in essence, its correlation to the Dow. And then another listener wrote in about the airline. So there's an airline index, which I've got up on my screen. Now, in honor of it being Memorial Day, I've got red, white, and blue line charts out here. The red is the Dow. The center is white. That's the transports. And the bottom blue is going to be the American Stock Exchange airline index out here. And we're going to go see if there's any correlations that we should be paying attention to. Because most certainly over the course of the last couple of days, those airline stocks have fallen off of, they've fallen from 30,000 feet up to maybe 15,000 feet up. Hope you're right.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and also welcome back to folks that are out there. We've got a flat market, and you can pretty much expect, I would have to say the same over the course of the next couple of days out here. So we're going to go ahead and since we've got a flat market, we're going to go ahead and take a look at some correlations to see if we can find any clues out here as to what the markets want to do. So we're going to take a look at what a couple of listeners here have sent in emails about earlier in the day. So the top portion of my chart here is the Dow. We're going to go ahead and pull this back into the 2000 time frame so we can take a look at a couple of different correlations for you. So as we move back into the 2000 time frame, the center portion of my screen is the transports. The bottom portion of my screen is the airline index out here, and so we'll follow along. So the first question became, the concept, as go the transports, is it so go the Dow out here? And right now, if we just take a look at the red line and the white lines out here, so we're looking at the Dow, we're looking at the transport. So it's a cool feature, nice cool feature with inside the eSignal platform to easily be able to just add different symbols. I can do that with inside of NinjaTrader as well. And those are my two primary applications that I use out here. Right now, we're just taking a look at the eSignal version. And we can see that the transports actually topped back here in May 12th, 1999. Now, I'm not trying to say that the correlation is we're now in May of 2015. But nonetheless, the data is what the data is. You go ahead and make out of it what you want. Now, of course, the Dow didn't top until December 31st in 1990. Actually, the high looks like maybe came in, on January 14th or so, somewhere right around there. So we can see that the transports continued to move lower for quite a period of time, quite frankly, right? You're going from, it's making a high in May of 1999, all the way. So that was, 7 months out there? So it's not as if the correlation with regard to the transports and their impact on its message of the Dow necessarily. I mean, so I guess the whole point is with the transports moving lower, if you were to just simply take a look at the 1999, and if you're a person that's thinking that there's going to be a major high that's put in here, don't get too caught up into forgetting to, don't make sure you go back and look at the historical correlations before you just jump to a conclusion out there. Now, in the case of the airline index, we're actually seeing the same kind of a thing. As we take a look at it, it actually made a high and topped out at the same time that the transports did out here, which was May the 12th. And the airline index went down from May 12th all the way. They made a, they went down all the while that the Dow was continuing to move higher. So you had, 7 months worth of a time period of this. So the correlation is not like it's not a correlation like what you and I looked at when we looked at the price oscillator inside of the summation index for the Dow. So if you're looking for more shorter term signals with regard to which way the Dow is going to move, to the upside or the downside, you tell me which one you want to rely upon, this or what we took a look at there. Now, that's in 2000. I don't know. Let's go check out. And I'm just throwing this up here. I haven't gone through this ahead of time to know one way or the other. Let's go take a look at 2007. And in this case here, I'm just really looking at the tops just to see what kind of formations that we have out here. Now, if we take a look at that last run in 2007, where we made our high in October of 2007. The transports themselves made a high back here in July of 2007. Now, July of 2007 is a normal time period for the Dow to go ahead and make a high up until sometime in through October. Middle October, end of October, sometime in October out there. And the transports followed along with that by making its high back then. The Dow went ahead and made a higher high. Now, you did certainly have that correlation. You had that divergence with making a higher high and the transports making a lower high out here and lower lows, but no real signal, no real signal. I mean, maybe nothing more than, a buoy with regard to a huge tidal wave that would be way the heck out that doesn't arrive for months out here, because then we're talking about going to July until October. So there's a 3-month span. And in the case of the airline index, its actual high during that same 2007 time period didn't happen until January of 2007. So it went from January of 2007 until October of 2007. There's no real correlation there that we can say that it's to me, that it's like an impending move of some type of move lower of any kind of significance back in 2007. Now, 2 examples are horrible with regard to being able to give you and I any kind of proof up to the validity. But all that you and I can do is go back and take a look at the data that we look at. These are the daily charts that we're looking at here. And the reason now to, let's come fast forward and let's blow this up just a tad. Remember, each of those correlations took months, right? In one case, 7, in another case, 3 or 4, or what have you, before things unfolded. And we did see a big hit yesterday in Unison. I don't know what started it, but you saw a sell-off in Delta, in Save, in Spirit, in Love, in Southwest, the American Airlines, the whole kit, and even Pan Am kind of jumped into the fray. They decided to come back. Things were selling off, and they decided, hey, what the heck? Out there. So at this stage, we know that we've got, if we take a look at the transports out here, the transports now, in essence, made a high back here, March the 20th. They actually made a high. Looks like the high might have been right here. So their high, February 24th at this stage of the game. And the Dow has taken out its previous high, moving higher. If we just simply add 7 months, you're looking at September, October, something like that. I don't know. So, we've seen this move lower, but you've seen this correlation last for a long time. Quite frankly, inside the airline index, its high was all the way back here, January 26th out there. So, I just I don't see how I can really use this as a correlating tool out here. I think there's some other ones that you and I can take a look at least on the shorter term, to give us some other types of signals as to what the markets are doing. In fact, there's longer term ones that we can take a look at too out there. So that's really investigating what goes on with the Dow and the transports and the index for the airline industry. Now, 2015 absolutely been a difficult year to navigate. This chart right here that I put up on my screen, this is actually the upper line that you're taking a look at is the Dow. This is a perfect day, today, tomorrow, perfect day to do this, because with the markets really not doing a whole heck of a lot, it's really a good day to take a look at this, just to try to get our bearings on what's really going on. Now, the top portion of my chart is the actual Dow. These are the closing prices of the Dow. The bottom chart is the closing price, in essence, of what the Dow has historically done over an 82-year period of time. And at this stage, in this chart here, I've included the 1987 data out here. And as we take a look at it, what you can see is over, let me get my cursor out here, make it a little bit easier for you. You can see back in January is when the Dow typically makes a peak, makes a high out there. And for the first part of January, typically on average up until about January 30th, is when the Dow actually moves lower. Now, during our markets, if you can go back into January, when people talk about all this horse manure, that as go the first 3 days, as go the first day, as goes the first week, as it's all crap. Okay, don't even buy into it or listen to it, because it's folks that actually don't do the work. Those are people just really reading stuff off of some monitor and aren't really going back and doing any correlation. Here's what you and I absolutely know with certainty. That on average, over an 82-year period of time, the Dow is going to make a high in the end of December, early first week in January, and then it's going to move lower into the end of December. If you were going to teach, as I've done with my kids, as far as timing as to when to go ahead and make their IRA contributions, their retirement plan contributions, you tell them to go ahead and put that money in on January 30th. Or sometime right around there. And they, on average, are going to be just fine. That when they're making that contribution, by God, tell them, do not wait until April 15th. That's the thing that's kind of crazy, right? You take a look at all, on average, the buying power that you lose out on. A lot of people wait, and they do their tax return. They don't make, and this includes this. This is not just for my kids. This is for every listener out there, right? You wait until April 15th. You're going to do your contribution, but you just simply know you don't have to make that contribution until April 15th. I think you can even go. Can you go? I think you can go. I can't recall if you can go longer, even if you extend your return out there. But why would you do that? Because on average, you're losing a great entry point. On average, right? I mean, that's all you can do is, if you just simply utilize this as a nice indicating tool out here, you'd be in really good shape. This year is no different than it has been in the prior 80. So we got that bottom out there. And prices started to move higher. And it looked like, from a historical perspective, that we were going to maintain this 82-year average. But that hasn't really taken place, has it? Because you can see, if you take a look at the historical average back here on January, the index, this is the Dow that we're looking at, really should be much, much higher than it is out there. So what does that mean? I don't know what it means any more than I don't know what it means. It means that, the correlation pattern, isn't necessarily working. We just take a look at that average. You got to pay attention to the turn dates, in my opinion, just like we do when we take a look at the Bradley model out there. So we take a look at those significant turn dates. Here, take a look at what on average happens during the May cycle out here, the May cycle right here. Just really the market moves sideways. Now, in our case, when we take a look at what's gone on since May, it was consolidating much before that. So I don't really know that this is in play. But it is important for me to at least point out that message to you so that come next year, and for years after that, right? You want your kids to get the most earning power. Don't let them miss out on getting money in on January 30th for that IRA contribution. And over the course of the long haul, they will do just fine. There's other time periods as well, but that's when most people are making that big contribution to their retirement funds. Now, we happen to be in the second term of the third year of a second-term president out here. Now, if we take a look at historically going back to 1932, I believe that there are eight third-year second-term options that we can take a look at. Now, what I will tell you that I did is during the Reagan administration, in his second term in year 3, that was 1987. I went ahead and cut that data out of here, just simply because this I've got all this stuff historically laid out, and I didn't want 87 at this point in time to interfere with that. But what I can tell you takes place on average, if we take a look at it during that second term out here, we can see that the market makes a high back in the January, in this case here, January 8th or 9th, and in January, the low comes in right around January 27th. Now, the interesting thing about this pattern is that really the low for the year inside that second term comes in right around March the 4th. Now, the actual low that is in our markets as we speak right now Is it the one that took place back here on January 29th? Yeah, you could say so. But there was another low that has come in from the March timeframe. This came in March the 11th. But here's the thing. Inside this pattern, once you get past, on average, during the third year of a second-term president out here, and this is Democrat, Republican, it doesn't really matter out here. You got to have at least enough sample size to shoot. This, I think, only is 7 versus 8 if I had included the 1987 time period in here. And it really, during this time, it won't really make much of a difference. It was just that October crash scenario out there, and I didn't want that to influence, 7 years worth of data. It would have just overtaken, I think, a lot of the numbers we looked at here. But basically, the market should zoom higher. And we haven't seen the zoom higher either inside of the market. In fact, we're just really getting back into the highs here from March, right, with inside of the Dow. So I don't know that we're on that we're on that correlation either. Look, the whole point of me even going ahead and bringing that up is really because of this morning, the questions about correlations between the transports and the airlines, and those are great questions. And it's great, and I want to thank you for, because it gave both you and I the opportunity to go at historical data and put this into perspective out here. This takes us over to this pattern, which is the patterns to help us identify what's really going on. And the Dow specifically is when you start to make this little tops pattern inside that price oscillator and below zero there. Look, if there's going to be anything that's going to be an extended period of time and a move lower, then certainly that would mark the. And I'm not saying that can't happen, but it's just those other tools right now aren't really giving us any really great indication of some type of huge, all-time high out there inside of the market. And I do not believe that it is that we're nearing that peak of that all-time high out there. And the reason that I don't is because of the let me see if I can put this chart. I think I shared this with you, but if we take a look at the margin debt analysis, right, because there's a lot of discussion about margin debt, which is you can go look at these statistics yourself out here. And during those highs that are made inside the market, it's when the margin debt as a percentage of what is going on inside the New York Stock Exchange just has one huge, significant, Eiffel Tower type of move out there. And that's what took place as the market made its highs back in 2000. That's exactly what took place as the markets made its highs back in 2007. And as we speak right now, we do not have that single huge, very quick, within a period of months, huge upthrust inside of the margin debt out here. So I don't think that I don't think that we are near those types of tops that we saw in 2007 and in 2000 either. At least that is Stevie's take, and take that for the grain of salt that it's written on. But it's well intended. That much I can tell you. Right now we got a flat market. The Dow's up 1, S&P's up 4. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex front page of TFNN.com. And options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report, a long-term newsletter where the focus is real wealth through the management of a successful portfolio of gold stocks. With a lifetime and almost 12 years of writing his weekly newsletter, The Gold Report, Tom O'Brien can provide you important market information to help you make better in the gold market. Don't let the next bull run in gold pass by. To get a month-long free trial report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, go to TFNN.com and get your 2-week to the Technology Insider. Get in on the floor of the next big thing today. TFNN is excited about our new software charting, The Art of Timing the Trade Charts. In collaboration with Brian and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, White has programmed an outstanding piece of software that will any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The beauty about what it is that each of us do here each day is we're really that's you and I. We're always looking for different clues, different patterns. And if there's any one thing that we know that is true about these stock markets, that these patterns repeat over and over again. In fact, it's true for most of us. Many of us do things that we know that we shouldn't do, right? Now, look, you don't intentionally want to harm yourself or harm others, but we know what to do. We just don't always do what we know. But when it comes to the stock market and analyzing what's going on there, we can look for these, and you can break through your patterns. That's what I have and do teach people to do. A number of years ago, 6, 7 years ago, I really dedicated myself to understanding why we do the things we do. I wanted to understand those patterns and be able to implement a set of tools that would allow anybody to break through anything that was getting in their way. And the idea is the only thing getting in the way of you and success is really you. Just turn your mirrors into windows, and you'd be amazed at what you can accomplish in life. Basically anything. Now, you and I can change our patterns. I can teach you how to do that. I teach people how to break through that stuff. But let's take a look at the patterns that exist in the marketplace. We're looking for those patterns out here. My absolute search of trying to find celestial type of patterns that existed out there that called tops and bottoms and other cycles, that there was nothing that was more prevalent at all of the large market tops out here than when price moved higher on less relative strength. Sounds pretty simple, but let me tell you, folks, and I stumbled upon it because I was looking for something else. But, like life, you got to keep your eyes open. Sometimes you're looking for one thing, but, we get up to the pearly gates. I don't want, the big guy to right in front of you all the time. Instead of eyes and open myself up to learning and finding new things. Look at the 2007 top, and back in 1928, you had this price relative strength divergent pattern. We have in place out here, quite frankly, take a look at the monthly charts up into this right here, which was December of 2014. In fact, you had a nice little doji candle. You had to move lower that very next month. there was ever a signal for a top, that would have been it. But guess what happened during the month of February out here? Just totally blew it off and said, the heck with you. No can't do. And so at this stage here, that pattern is done and over with for the time being out here. We can see prices made a nice 1 to 1.272 A to B equals CD to the upside, but it may not be over. It may want to head to that 20,769, that 1 to 1.618 A to B equals CD to the upside. We probably won't know for a few months because we could be in a seventh inning stretch pattern on the upside here as we take a look at the Dow, and that's where we can significant and swift moves to the out here, and but maybe not. Maybe it's really not. Maybe this is just into some other countdown to see prices, because we are in that favorable cycle out here. Even though the Dow is tracking along either the 82-year average, the third year of a term president, it's not following the years where we've had a down year. Have that chart. I didn't show you that chart here this morning, but it is definitely, it ain't even close to any of those years where we have a total significant down year out there as well. So hopefully that's been helpful to you to understand what's going on inside of the Dow. Let's just say this. I think at this stage of the game out here, we know that if we see a move below the zero line inside that price oscillator, we're going to see at least a one-day drop, a significant drop. We're going to to the 17,700s area, and 17.5. Well, guess what? That says move back down here into the February lows. So, folks, stay tuned. On this terrific Thursday, we've got an extraordinary lineup. We've got men like Basil Chapman. He's going to be up next. After Basil, we've got Larry Pesavento. We've got Daryl Martin, David White, Tom O'Brien, and Andy Heck to take it on home. So have a great Thursday, folks. We'll see you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.